The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians out with my, you can't see it, with my TFNN t-shirt on here. This is the Tiger Technicians Hour, 11 o'clock till noon, right at this time, Monday through Friday. On market days, we got the Dow down 136. Yesterday we were up about the same as we were down on Tuesday. So now we're back down. This is going to be interesting. Have a look at this chart. Just look at this. Looks like a zebra crossing, right? Black, white, black, white, black, white, black, white, white. It looks like you're about to cross the street. Well, I said to my subscribers in my opening call this morning that I'm not changing anything. This appears to me to be, I did a lot of work last night. Everything about the action yesterday appeared to be both a short squeeze and some new buying coming in. Typical Fed response. We've had it now 3 times, I believe, after the Fed has announced this go slow business. And as far as I'm concerned, that 9-period exponential moving average and lower lows and lower highs is really the theme that we're looking at. And until that changes, the sell mode in the Dow continues. Just make it as simple as that. Look at the MACD. It hasn't turned cross positive. The stochastic's fading once again, down at 32%. I'm sorry. We can have bounces, but it's within the trend. Remember, you throw a piece of driftwood out when the tide is going out. That driftwood will not come to shore. It will not come onto the beach. If the tide is coming in and you throw the piece of driftwood out, it will not go further out. It'll constantly come back into the beach area. So, with that said, thank you to John and Steve for 3 great hours. I'll try to do my best right here. This is going to be a very interesting week because a lot is going to be determined by tomorrow's close, Friday at 4 o'clock. Have the key indices, weekly charts, gone from a sell signal to a sell mode? It's as simple as that. Now, if you look at some of the sectors, like the IBB, that's the biotechs, holding quite nicely here, down $1.42. Let me just move this away. You will see that the weekly chart is still way above the 9-period moving average of 270.16. It's at 272.59. Peaky in the den says, I think there'll be one more rally to a new high before the IBB gives it back. I'm not so sure about that. Maybe, but I don't think so. A lot's going to have to happen over the next couple of days for that to happen. All right, so let's just go to our story here. We'll get all the numbers. And in my opening call, we do remain short. Remain short to the S&P, right, or from almost the top via one of the ETFs, 300% short ETF. We keep going back into the Dow short. And unfortunately, we missed. we got the VIX index again today, and we got stopped out very tiny, 1%, 1.5%, 1.25% loss. I wanted it, but I just wasn't prepared to take a chance and widen the stop. So 5-cent stop. It got hit, and now it's starting to rally. No big deal. There's plenty of time for that. So let me do a couple of things here. Let me run the numbers, and I'll run them with the chart so that you can see. Remember, this is, I've moved the E-mini away for the moment. I'll just put this here in the corner so that when I have a chart that corresponds to 4 time frames, you can see the right here in the corner is the 120-minute chart, all with the Chapman wave notation. This is the Dow daily. This is the weekly right here. Let me move that over, right here. So to the left, daily. In the middle, weekly. On the right, monthly. Monthly has to break under 16,600 and let's call it 16,600, to start breaking underneath the 9-period exponential moving average. So it's at 16,888, down 111. What can I say? We just got to wait, have patience for October to finish. But look at the weekly chart, back under the 9-period exponential moving average. This is a potent technique, this particular technique, that double camel hump. This is the right shoulder stochastic technique. And look at the MACD deflecting lower. So days young, anything can happen. Could have one of those crazy bounces. Meantime, back at the ranch, let's do the numbers. So the Dow has to really clear 17,050 and hold, and then really quickly, within a day of getting there, it can have a day of rest, but the second day after that has to go to 17,100 to decisively say, I'm breaking all the resistance on the left side. Until that happens, we're going to be looking at this choppy lower highs and lower lows scenario. Now, I need to just put this in here because it was a trough D. Well, we don't know if it's a trough yet, but by the end of the day, I don't think we'll break the low of 16,663.26 of yesterday. So I'm suspecting this is a trough D. So that's where you can see a bit of a bounce. And that's what you had yesterday. And today, there's no follow-through to a new recovery high. So the S&P. So the parameters are Dow underneath, or short-term, underneath 16,020 to 16,800 support. Very negative. It's probably going to go down and retest the low of yesterday. A reversal by this afternoon going into tomorrow with the Dow up at that 1720 area says, hey, now there's a good chance you can start testing the upside. We'll see. We'll see. S&P, SPX.X, here we go. S&P, same sort of thing. This is different, though. In this case, you've got a very decisive up channel that has Chapman wave inside track, a repellent and propellant area. It was the propellant area I was actually talking about yesterday that was hit, and we sprang to the upside. Whenever you see these long wicks like this, if you get 1, 2, or maybe even 3, it's just saying, think of those houses near the beach that are on stilts. At some point, there's going to be a high tide that goes right underneath and starts touching the bottom. So those stilts are really there. And the long wick, the shadows, are going to be tested at some point within the next 2 weeks. My suspicion is that within 2 weeks, we'll see an S&P below 1942. That's what was the low, 1926 and 925. And then 1926 to 1925 support will become both a magnet. And once again, we've got I don't usually do this, but there's a third trend line right here. And that trend line, I've done it because you've got a sub-channel that's going to the downside, going sideways to down. And that says by next week, we should be testing 1923 in the S&P. We'll see. Days, yeah. Let me make sure that a break above 1975, the 9-period exponential moving average, would be very, very positive. I just don't think that's going to happen. But we'll see. Those are the parameters to watch. Most importantly, just watch the VIX. The VIX index is holding at these levels in the 15s, the mid to high 15s. If the VIX goes back to 16.20 in the next 2 days instead of breaking under 15, that's going to be very positive for the volatility index, and that'll be very negative for the general market itself. Now let's go to the QQQ series. QQQ series is right now at 98.45 unch. That's quite good action, holding the above the 9-period exponential moving average. It didn't break to a low yesterday. 95, 97 was the low of the second. And we haven't broken that, and that's very important. So looking at this particular technique, let me just say that we haven't got a new leg. We've got a new leg B right there. That is a B, but it's really struggling. And to me, I'm looking at this and I'm thinking, okay, we've just got either an H pattern or a rectangle pattern, and that says that the parameters to watch on the Qs are very simple. A close above 1976 would say that's very good action, not great, but good. And the big bar that you're going to have to monitor is the bar on the 30th of September with a 99.30 high. A break underneath by Tuesday of next week, a break under 97.60. not too far away from here, would say, uh-oh, we're going to be going back to test the low that was made yesterday. Now, so far, we're struggling to hold the 9-period exponential moving average in the weekly chart. But have a look at this. There's a down channel that has begun. I drew this in a little while back. And this down channel says that until the QQQ series can close above 98.90, this 9-period moving average right here is both a magnet and it's beginning with a very negative. If you don't look at the different techniques, you'll miss this. The MACD is turned down. It's negative. The 0% bar is negative at minus 0.17. This is the weekly chart. The stochastics at 79, under 80%, and the on-balance volume is showing signs of tiredness and pulling back. Relative strength has been failing. I'm watching this real closely. Why? Because if any time next week you start to see the QQQ series trading, doesn't have to just hit it and then bounce, but if it's trading in the under 96, and I really mean trading, I don't mean just slips there and goes back to 97. It's trading there for a couple of days. It's saying, watch out, there's a trend change, and that trend change is suggesting the 9-period exponential moving average is going to become resistance rather than beautiful support. So now let's just run a couple of things here. Gold is, in fact, up 18 at 12.24. It's down from the highs. Let me show you the chart. Hey, great call, Steve Rhodes. Yesterday you were talking about this. You analyzed it. You gave us all the parameters, and you said that we are real close to a very sharp move to the upside. Boy, did we ever get that. Congratulations. One of the things I've been discussing for a little while here, how are we going to test that left side low bar in the gold contract of 1185? Well, not only did we test it, we broke under it. We went to 1183.30 yesterday. And then the rule of thumb in this H pattern, in my CD Introducing the Chapman Wave Methodology, I talk about these patterns. I talk about them a lot. And what I discussed was that there's a particular technique that says after the H pattern is completed, by going underneath the left side low bar, if that bar goes underneath and then springs back up, that's very important. Why? Because if it closes below, that's negative, and all you can do is bounce to the previous peak. That's actually quite high up, but that's the rule of thumb. If it doesn't even break that low, you can not only go to the previous peak that was made on the upside, but you can go to the arch high. In this case, it would be all the way to 1347.50, made on the week of the 11th of July. If, in fact, you close below and you close down sharply, and within 2 bars, you don't even get back to the recovery of the left side high bar, in this case above 1185, that is very negative. You can only bounce to the nearest resistance, and that's the 9-period moving average of 1240. So let's just run this down. Silver is up 46 cents to 17.53. Crude oil is down again. Bonds. We'll talk about bonds when we get back. Dollar is now up 16 cents, but it had dropped quite sharply. I'll be back. Dow's down 118. Basil Chapman, Tiger Technician's Hour. I'll be back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we've got a number of questions that got both email and in the den. And let me just do this. The TLT, which is the 20-year Lehman T-bond fund, went above the 119.43 29th of August high. There was an island reversal and a plunge down to 112.73. Now it's come back very strongly, and the high today is 119.61. I was waiting to see how the 120-minute chart made its leg D, and it did. And that says, just on a shorter-term basis, we've got to watch this real closely. Near-term basis, that means over the next day and a half or 2 days, we've got to watch bonds because there could be a bit of a pullback, and it should be just a bit of a pullback down to the 118 to 118.50 to 118.02 support, maybe 117.42. But if it's time, then rather than price, that 118-ish area should hold. If it is price, a couple of things are going to go on. It's going to say that the U.S., let me look at the notes, the T-bonds itself. Yeah, T-bonds, you see, I've got in leg D, and I'm inclined, it's really a C/D. I meant to make a note of that. This is a C/D because what I've done is I've used a phantom peak. And I'm not happy with this phantom peak. It's just a little 137.18 and 137.18 is parallel highs. I did get a little inflection point right there in the on the unbalanced volume, so it allowed me to use that. I prefer to be very strict in this case but because the stochastics at 91% and the MACD is still very good, so I'm calling it probably C, but there is a chance that it's a D. So if I was long the TLT, I'm not long the TLT or the or bonds on a very short-term basis. I'd just be taking a little bit off now, waiting to put it back on. Bonds are at 140 and 22.30 seconds. Well, I'll give you the exact number. 140 and 22.30 seconds. And that's in leg C in the contract itself. I have to stick with a leg C. I believe that it's leg C. I believe this is an up arrow. We should get a full count of a phantom E, which will be the regular D. So I'm going to just leave it at that and say bonds are still very strong, down 39 cents in the TLT, and leg D in the 120-minute chart, and that's saying that there could be a pullback. I don't know if it'll go below the gap of 118.18, but that's you got to expect a pullback to test the low 118s. Now that's the TLT, and the only thing I wanted to finish here was look at the dollar. DXY. This is a dollar index. Very sharp pullback. In fact, now I have to put a down arrow because it has closed below the 9 EMA. MACD is very negative, and the stochastic is down at 60%. So on a daily basis, we're looking at a pullback. But there is support based on the 120-minute chart. This is like a magnet. It's like a trampoline. So the trampoline cover is right there at 85.33. But the sheer force of your drop to the downside has taken it a little low. It's gone to 84.94. That was at 3:15 on the 9th. That was today. Oh, time's flying. Isn't today the 9th? Is today the 9th or is today the 10th? Did I say it was the 9th or did I say it was the 9th? Yes. So this is saying that in this general area here, no, we didn't want to look at that. We want to look at 120, there it is. There could be a bounce, and there has been a bounce. And now the magnet of the 200-period exponential moving average, which is at 85, why is it not highlighting? 85.32, says that we might go back down a little bit, but there's a better than even chance that this magnet is going to contain the price between, it's at 85.34, between 85 to 84.80, and even on the upside to 85.75, 85.95, and then perhaps come back again and test the 200-period moving average. So we're in a consolidation phase, and that corresponds to the sharp move in gold, which went above the 9-period exponential moving average. Now, this is going to be very interesting. I don't know if I should take time now. Tomorrow's Technical Friday. I won't take time. I'm just going to draw this in and say there is a chance that this is a Chapman wave flat base restart right here. And that if it is a flat base restart, very soon we should come back to test 1205.10 in the gold contract. And that is going to where you're going to see, is this a big test of strength that says I just need to pull back to re-energize because I'm going much higher to the 1240 area. Gold right now is at 1224.60, up 18, 12. Yeah, and or is this a single leg A up that's bound to fail and come back down? Oh, talk about bound to fail. I must show you bonds, and then I'm going to answer those questions that I was asked in the den and an email. I'll be right back. Basil Chapman, Tiger Technicians Hour, 877-927-6648. Dow's down 119, S&P's down 13.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Tiger Dow's down 135. S&P's down 49. The trend didn't change. I had so many emails from subscribers and tigers who said, are you not looking at the long side? Why are we so short? And what? And I was tempted so many times to kind of, you want to respect your subscribers, you want to respect your listeners. So I would do my homework, and I just keep coming back to this thing that says when the tide changes, you've got to watch all those activities that go towards the trend that you're looking at. And in this case, if the trend has gone down, it means that any good news gets negated very quickly. Like yesterday, we've given back over half of that huge gain. So all I can say is that, to me, the trend has not changed at all. It was an aberration. I'm really upset we got stopped out of... I had expected that there could be some kind of a rally yesterday, so we had some buys in that were way lower than where the price was at any point in the morning. And then out of the blue, you get that turnaround. Not only did it get down to those amazingly low prices, but we actually got taken out for very small losses. Well, one we had a gain of 2%, then we lost 2%. But, it's just it's upsetting to do that. Thank goodness I've been absolutely determined to keep core positions on the short side and held them. One is a full position actually on the S&P. And I can just say it's going to be really hard. Like yesterday, it's going to be very tough not to say let's take profits or let's raise the stop. Let's just, well, raise the stop because we are long, 300% short by being long a particular ETF. So it's very, very, very hard. And these years of being every time there's been a market pullback, poof, you go to new all-time highs. I think this time is different. So with that said, Brian asked a question about steel. Well, actually about steel, but specifically about U.S. steel. X is a symbol. And it went to 46.55, a beautiful round trip. Look at that monthly chart. This is spectacular. It goes all the way back and falls in that very ugly period where it started breaking down from the 200-period exponential moving average back in July of 2011 in the 47 area, plunges down to a low of 15.80 in April of 2013, hits 40. I mean, this is amazing, 46.55 just recently. And lo and behold, from there it's pulled back. Yesterday's low was 33.97, trading at 35.17. I'm going to make a suggestion. Brian, you've held this almost like a round trip, and I am suspicious of this particular move. The rally yesterday and giving it back today. If I look at the monthly chart, yeah, we might go to a D, but there's a pattern here that says that the stochastic is at 82% and the MACD is good. You're going to need to confirm with the shorter-term trends. And the pullback from peak C, that's the only way I can count it in the weekly, is just too deep. Something's going on here that's different. Now, if you heard the guy from Alcoa yesterday, I saw him. I hear him in the beginning and during the day or after the bell. But I saw him with Kramer last night, and he just went on and on. He's done a fantastic job at Alcoa. And I said to myself, oh, my God, the length of his words is going to be the size of the downward move if history repeats as it so often does. And, boy, they had a fantastic turnaround. He's talking about Europe as if everything's turning. I'm saying to myself, the chart is not saying that, mister. We've got a peak E in Alcoa at the top back in September of this year, and we've pulled back very sharply, gone underneath the up channel support area. We haven't closed under it. We're testing it. There's a peak C, yes, in the just like there is in U.S. steel, but it's underneath the previous high of 18.47 back in 2011. I think Alcoa is going to be good, but at this particular point, I think Alcoa needs a break. It needs a breather. So if all the things he's talking about, he's certainly not going to lie. He's talking about the good things. I'm suspecting that Alcoa is going to do some backing and filling, and will probably go to the mid-14s before it has a pretty good rally again. So let's go back to USX, because that was the question. And so I'm going to suggest take something off of USX. Yeah, 10% below maybe what you paid. I don't remember what you paid for it. You should have remember, I have a rule of thumb that if you are in a position that is a shorter-term trade and it goes against you, you turn into a long-term position hold. If it ever gets back to close, doesn't even have to be in the area, just has to be close to where you got it, get out. And then rethink it, and within 5 seconds, you can say, I've thought it through. This is a new position. Now I got a fresh way of thinking, and here's my stop. But get out of that other position. I don't care what the tax consequences are, whatever it is. But don't get married to it. Now you get married to it, Brian, and look, it's under the 9-period moving average for the second week in the weekly chart. I'm unhappy about that. So please take something off, at least. Get cash back so that you've got capital to use again. You can buy it back lower. Even if it's just 2-3 points lower, it doesn't matter, it's lower. And your thinking is different. Now, the core position, boy, if you could buy a put just to ameliorate some of the issue, and then you can hold it, and it means whatever it is now, that's your loss. But you won't increase the loss because you've got a put to cover it. And if it goes up, great, your position goes up and the put goes down. Please be careful, protect yourself. I don't like this market. This is a bear market as far as I'm concerned. I think I've got that out the way. All right. Next one is Warren asks euro. Will it bounce? Well, look at this. EUR USD. How much is it going to give back? That's really the question. Absolutely. The weekly chart is saying, boy, it needs a little bit of a bounce. That's that rule of mine. By the second bar that's broken underneath the left side low bar, can it get back? Well, look at this. I'm going to squeeze this so that you can see. This is the EUR USD. It's broken the left side support of 1.266 made back in the week of the 16th of November of 2012. I don't think so. I think it's going to maybe rally. It could go to 1.289, the 9-period moving average, but then it comes back down. I think it's got lower lows and lower highs. I'm sorry. That's the way I think of it. And that makes the dollar still, now I'm prepared to use the word king dollar. I think the dollar's the place to be. That means that this rally in gold, I think it's going to fizzle very soon. There's the dollar trying to get back again. Back to that 200-period moving average. We were just talking about these things. So that's my Dow's down 176. S&P's down 20. Great. I mean, is that what you want? Do you want? I'm not prepared to buy on the long side. I don't want to have this kind of risk. When the tide changes, remember the piece of driftwood? It means that if you go short, I should have used this as my own philosophy for the positions we bought this morning. Oh, well, one of them is doing very well. Sorry. That's the short positions that we added to. If you are looking at going short in this particular environment, it means that whenever the tide goes back to what it should be doing, which is going down, you're in the right position, even if momentarily you're wrong. And if you are right, then you just want to add to short positions. You don't want against the trend. Oh, I'm going to try to get my CD up for the next one. I want to show that chart. This chart is just great. I love this chart. I'll get to it. Okay, so that was the question. So Warren, yeah, euro can bounce, but I think it's the dollar. Now, the dollar might take a little bit of time yet to consolidate. So on a very short-term basis, yeah, I think that the euro, FXE, let's go to FXE. FXE, yeah, the euro, which is at 125, had a high of 125.67. It's at 125.13. That's the FXE. It is the currency shares, the Euro Trust. Yeah, it could have a bit of a bounce. I just think I'll draw it in. This is what I'm expecting. Uh-oh. Mouse. Go on, mousey. Little mousey. Okay, there you are. Right, and that's what I'm drawing in, that there could be a bit of a bounce, and that's the same with the gold. A little bit more of a bounce, and then I think it comes back and retests. Yeah, there it is in the weekly chart. So I've drawn it in. A little bit of a bounce, and then it comes back down to retest. If you're looking at the GLD, look, there it is. A little bit of a bounce. It's making an H pattern. It goes to a lowercase m pattern. Here's another one of those bounces that's coming. Monthly chart still looks very poor. Okay, now let's go to the thing. My first question was data. DATA, Tableau, Software Inc. Tableau looks like it wants to make leg D in the weekly chart. It's trading at 74.56 up. The Dow is down 1%. The S&P is down 1%. Data, Tableau, Software Inc. is up 2.86%. Is that good relative strength, or is that good relative strength? So I think that there's a chance that it'll make D at 78.43. 4 and a little bit points away from here. But you've just got to be watching it real closely, because there must be news that's coming out that's good. I've drawn it in the daily chart, which gives it the cup formation. So I think it's going to go a little higher. And it's a lot of points from 74 to 78.42, the old high, in that area. But then I think it's going to fail and come back. So it's making a rectangle pattern. If you're long, I would stay long. I'd raise one part of my position stop to about 73.60. Why? Because I think if it breaks under 73.50 or so, it's going to be a very quick move towards the lower part of this range. But actually, relative strength is acting beautifully. And looking out on a monthly basis, this should still go to higher highs. But in the short term, the market condition is going to impact it at some point. But it's looking really nice here. Next question was, let me just go back here, IBB. So the IBB, which is trading down 3 at 271.05. You know, I'm very upset. We bought the 200% short position yesterday, way lower than the high. I'll show you what we did. The Biz had a spiral up. This is 200% short. It's called the ProShares Ultra Short NASDAQ Biotech ETF. It went all the way to 1283. I said to buy it at 1140. Let me just double check. Sorry, 1240. So it goes all the way to 1283. That's a lot. I mean, down 40 cents. Well, not only does it go down, but it plunges all the way to 1185. So we were stopped down, and now it's acting quite well. And I think that the IBB is struggling. I think it's struggling. It's making a double top. It's going to take time because fund managers love the stock. It's the stock du jour. And as such, you're looking at a situation where anytime there's even a hint of a rally, they're going to grab this instrument and just try to ride it, because every other time, not only have they been correct, they've been the leaders of the pack because it's been so powerful. So that's my story. And so that was so IBB. If the IBB closes under 269 today or tomorrow, watch out. It's going to be going down, and then it's under the 9-period exponential moving average. Now it's down a little bit more. It's down almost 4. Next question was GILD. GILD, one of the great biotech stocks, Gilead Sciences, going to a leg E in the monthly chart. Is probably going to be a peak E if it can't go above 110.64. And right now it's at 107.08 down, $1.79. It's making a peak C1, C2 double top in the weekly. This is called what I call a cluster formation. It's either really powerful as a breakout, or it's very powerful as a breakdown. And the only levels to watch are the recent high. So if it goes into the 110.70s, that's really positive. But if it breaks at any point under 107.89, let's call it 107. Closes under 107. Is that correct? I'm sorry, that wasn't right. We're almost there. No, it has to close. If it closes under 105.30, the low of 3 days ago, that's very negative. So Gilead. And that's been one of the great stocks. Now, there's another question I had. Let me see. I don't want to miss anything. Hey, just type into the den if I've missed a question, because I'm trying to do this, and somehow the mouse just got its own mind right, yeah? Yeah, okay. So the question is, in the 120-minute chart, the IBB is only in leg A. No, I've got it as A, B, C. Now, we've seen that C's can fail. Yep, C's can fail. And am I right? A says B1, B2, B3. You know those 3 B's over there? I'd venture to say that I would use one as a phantom and say that it's a phantom C and this is a D. So that's the way I would use this, and just make it real easy. If the this is I love it. Press the wrong button. Yeah, leg A, but leg A's can fail. This is a single leg A up. Could fail. Hey, the Dow's down almost 200 points. What about the Fed yesterday, huh? God, was that a fake out? Was it a fake out? I'll be right back. I'll show you my seat.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
Hi, folks. Basil Chapman. I'm having a little trouble here with, let me just get this mouse. There we go. Why did I say that I want you to get my CD introducing the Chapman Wave methodology? There's a very, very specific reason for it. Let me just look at the chapters here. Arch, instant overlapping, dreaded H pattern, right arm extension, instant restart, right shoulder failure, drop back phantom peak. I can't remember anymore. Oh, what a pity. But let me just show you the pattern that I think is absolutely going to predominate for the next, at least for the foreseeable future, and that is the arch or the H formation. The arch formation says, look, be careful, because you can get a matching move from the left side to the right side, just like I'm pointing to right here for my subscribers. That's why we are short the Dow, because I've got a left side, right side. Actually, I moved it. The date was really to tomorrow, but since we were so far away, I said, all right, we can still extend. Here's the key support level. You got to watch by tomorrow, you've got to be holding 16,631 in the in the Dow. But look at the MACD, still negative. Look at the RS. Look at the red histogram there, down, negative, minus 33. Look at the slow stochastic, negative, can't get out of its own way, back at 30%. This is not good action. Look at right here. Let me talk about this for a moment. I'm going to move this away, and I'm going to show you what else I give my subscribers every day. This is my 5-panel quadrant. Little joke. Here's a 120-minute chart right there, Dow. Here's a 120-minute chart of the VIX index right here. And here's the ARMS index, which gave a fantastic signal yesterday to suggest that there will be, within 2 days, a very powerful move in the futures that would be translated into the cash indexes. Well, it was very unusual. It worked instantly. It worked. It was in the morning it gave the signal, and by the afternoon we had that 2-hour rally of 270 points. And I said to my subscribers, I think it usurped all of that. So now you're looking at that tremendous, that falling axe resistance line. Bam, it hits it and it's the repellent zone in the S&P, and I discuss it in great detail, and I say what to look for and the levels. I even say here, under 14.80s, the market continues higher. Over 15.50s, market gives back some. Well, at 17.21, it's giving back 245 points. Oh, my, look at the VIX. Oh. All right, well, we've had some great profits from that. 34% of one of the positions. Can't complain too much. Anyway, so I'm going to complain. Why shouldn't I complain? I had it correct, and I was just a little too... that's what happens, because I started listening to the news, and I thought, oh, maybe there will be a little bit of a rally more than I thought. So I made the stop really tight on the VIX index, and we got taken out for a very small loss, but it would have been great to have had it in right now, because this could continue right into tomorrow. Look, we've just given back almost the gain that the loss that was made on Tuesday, the gain that was made yesterday, and now we're back in the 16,000 low 750 area. Unbelievable. Now it's very much like 2008. This is the fun. This is the volatility side that I love. Anyway, so back to our story. You remember what I was talking about the other day? I said that my Dow Quartet is acting horribly. That G is my pilot light short term. Horrible. Look at it right now, 24.98. IBM, it just can't get out of its own way, down to it, 187, still in that sell mode in the larger context. Triple M, one of the best of the Dow, major Dow stocks, going right up into just a few weeks ago. Down again, acting very poorly. And UTX, my more intermediate term pilot light indicator, flopping. Oh my God, a peak F in the monthly. Hey folks, just be careful. We've got Larry Pesavento coming up, and it should be a great show. Great shows all the way through today, and I'll be back tomorrow. Have a wonderful day. Check out my opening call. Good time to do it.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.